The U.S. stock market is currently in its pre-market session. As of Wednesday morning, January 14, 2026, Ondas Holdings, Inc., ONDS, is trading at $13.91 USD, showing a slight pre-market gain of 0.02 or 0.14%. This follows a strong performance on Tuesday, January 13th, where the stock closed at $13.89 USD, up 0.70 or 5.31% for the day. While the headlines are focusing on the recent share price surge, the actual underlying reality is a massive strategic pivot that just culminated in a staggering $1 billion capital raise, a move that has effectively transformed the company's balance sheet overnight. Most investors look at the $14 price tag and see a stock that is already run too far. But the reality is that the market is only just beginning to price in the implications of Ondas having nearly $1 billion in dry powder, while the drone and defense sectors are entering a supercycle of government spending. The common belief right now is that Ondas is just another high-flying speculative drone play that is currently overextended after a 500% run over the last year. People see the high price-to-book multiple and the recent dilution from the 19 million share offering and assume a massive correction is imminent. I am here to challenge that. When you look at the specifics of that $1 billion offering, it wasn't just a standard capital raise. It was priced at $16.45 per unit, a significant 17.5% premium to the market price at the time of the announcement. Institutional investors don't pay a 17% premium for a speculative stock unless they see a valuation floor that is much higher than where we are currently trading. While retail traders on the Robinhood app might be taking profits, the reality is that major players are positioning for Ondas to become a dominant vertically integrated defense platform. Over the last few sessions, we have seen incredible volatility as the market digests this massive influx of capital. Yesterday's 5% gain occurred on volume that, while lower than the recent record-breaking days, still showed aggressive dip buying near the 1320 support level. This is a classic sign of strength in a high-momentum stock. The expectation was that the closing of the $1 billion deal on Monday would lead to a sell the news event. The reality is that the market is looking forward to the Investor Day scheduled for this Friday, January 16th, and the Needham Growth Conference presentation happening today. Investors are betting that CEO Eric Brock is about to unveil a 2026 revenue target that dwarfs the current $110 million consensus. If they can show a clear path to EBITDA positivity by the second half of this year, the current $14 handle will look like a historical bargain. If you are managing your own portfolio through a platform like Fidelity Investments or using the SoFi trading platform, you need to understand that Ondas is no longer the small-cap science project it was 2 years ago. They have successfully transitioned into a diversified technology conglomerate. Between their Ondas Network segment, which is becoming the standard for North American rail communications, and their Ondas Autonomous Systems division, they are attacking two of the most critical infrastructure needs of the decade. While the market often fixates on things like Tesla stock or Nvidia stock for growth, Ondas is carving out a monopoly in private wireless networks for Class 1 railroads. This is sticky, high-margin revenue that traditional drone companies simply don't have. I want to get your take on this massive $1 billion raise because it has completely polarized the community. Comment below how many shares of ONDS you are currently holding and whether you think the $16.45 premium paid by institutions is a guarantee of higher prices or if the retail crowd is about to get washed out in a secondary correction. I see a lot of chatter on the Interactive Brokers forums about the dilution factor, but I want to know if you see the war chest as a positive catalyst for acquisitions. Looking at the institutional activity, the shift has been dramatic. Over the last quarter, we have seen firms like Stifel raise their price targets to $17, while Oppenheimer recently upgraded the stock to outperform. This institutional rotation is the reality that many casual observers miss. When you see insiders selling, as we did in late 2025 with about $12 million in sales, the expectation is that the ship is sinking. The reality, however, is that those sales were dwarfed by the massive institutional appetite for the new offering. We are seeing a changing of the guard where early venture capital is exiting and long-term defensive growth funds are entering. This is exactly the kind of behavior you see in a company that is graduating from a small cap to a mid-cap powerhouse. For those who are just finding this ticker while looking for online investing opportunities, it's important to understand what Ondas actually does. They provide the brains and the nerves for autonomous systems. Their Ondas Networks division developed the .16 wireless standard, which the American Association of Railroads has essentially blessed as the future of rail communications. Meanwhile, their Ondas Autonomous Systems division owns the Optimus system, the first drone in history to get full FAA certification for automated aerial security. This isn't just a toy, it's a fully autonomous drone in a box that can protect an entire industrial site without a human pilot. When you combine this with their recent acquisition of RoboTeam and their expansion into counter-UAS technology, they are building a holistic security ecosystem that protects the ground and the air simultaneously. The future outlook for 2026 is centered on three major catalysts. First, the 2026 revenue guidance. Management has already teased a $110 million target, which would be a 200% increase from 2025. Second, the Department of War Blue List inclusion. If their Optimus system gets the official nod for broader military use, the floodgates for government contracts will open. And third, the potential for a massive acquisition. With nearly $1 billion in cash, Ondas could easily swallow a competitor in the ground robotics or AI sensing space to round out their platform. The expectation is that they will spend this money slowly. The reality, given their aggressive rebranding to Ondas Inc. and the relocation of their headquarters to West Palm Beach, is that they are preparing for a rapid global scale-up. However, we must address the risks. The reality check here is the current operating loss. Despite the revenue growth, the company is still burning cash from an operations perspective. While the $1 billion raise removes any bankruptcy risk for the foreseeable future, it also increases the pressure on management to deliver return on invested capital. If they can't turn that $1 billion into meaningful earnings by 2027, the market will eventually turn on the stock. This is the classic execution versus expectation trap. The market expects a transformation. The reality will depend on their ability to integrate their 5 recent acquisitions into a single cohesive revenue engine. If you were looking at this from the perspective of an individual brokerage account, you should also be aware of the warrant overhang. The recent deal included warrants to purchase 121 million additional shares at $28. While that $28 strike price is double the current market value, it creates a potential ceiling in the future as the stock approaches that level. Short-term, however, this actually acts as a bullish signal. The institutions are betting that the stock will not only reach $28, but will stay there long enough for those warrants to be valuable. When you compare this to the volatility of something like SoFi Invest or the Robinhood app's top movers list, Ondas stands out because it has institutional skin in the game at much higher prices. To summarize the central insights of our analysis, the expectation is that Ondas is a speculative drone stock that is peaked following a massive run-up and a dilutive capital raise. The reality is that the company has just secured a $1 billion strategic investment at a massive premium, effectively de-risking its balance sheet and providing the fuel for a massive 2026 expansion. The contrast between the retail fear of dilution and the institutional greed for the premium units is the defining narrative for the stock today. We have analyzed the intraday strength, the $110 million revenue trajectory, and the structural shift towards a global defense and security platform. The outlook for the rest of January is heavily weighted towards this Friday's Investor Day. If the company can provide specific details on how that $1 billion will be deployed to hit its 2026 targets, we could see a push towards the 52-week high of $15.28 and beyond. If the presentation is vague, expect some sideways consolidation as the hot money exits. Regardless, the depth of this analysis shows that Ondas is no longer playing in the minor leagues. It is a well-capitalized, strategically positioned leader in the autonomous sector. Maintain your focus on the .16 adoption rates and the counter-UAS contract wins, as those will be the true indicators of long-term success. Stay disciplined with your entries, watch the 13.19 support level closely, and I will be right here to update the narrative as the reality of 2026 unfolds. Disclaimer: this content is for informational purposes only. It's not financial advice, so don't make any decisions